Investing in the Middle East, the best play to make. The International Monetary Fund said in its World Economic Outlook that the Middle East economy would expand at a 5.1% clip in 2011. That's well above the 1.5% pace projected for Europe and Japan. The IMF has revised upwards its estimate for economic growth in the Middle East this year. It expects the regional economy to expand by 5.5% through the 2012-2013 cycle. Consumer markets in the Middle East will be key for the global markets as it looks to drive exports and sustain growth. Opportunities for foreign investors are tremendous, both for a huge country like Saudi Arabia, but also for a small country like Bahrain. Saudi Arabia. Saudi Arabia plans to construct 16 nuclear power reactors over the next 20 years. The kingdom has more than 2,500 kilometers of clean coastal area on the Red Sea, which could be used for fish farming. Saudi Arabia has unveiled ambitious plans to develop renewable energy that will produce 54,000 megawatts of electricity by 2032. Saudi Arabia will invest over $700 billion in construction and infrastructure over the next 20 years to meet the demand of a rapidly growing population. Oil-producing companies from the kingdom have committed investments totaling $165 billion for the 5-year period from 2013 to 2017. Egypt. 3.71% of Egypt's landmass is agricultural land, according to the World Bank report in 2010, while it was 3.56% in 2008. By 2015, Egypt's GDP, based on purchasing power parity, is expected to be $725.22 billion. Exports of natural gas rose 2.9% to $1.96 billion in the 2011-2012 fiscal year ending in June. The total population in Egypt was last recorded at 82.5 million people in 2011, up from 27.9 million in 1960, changing 196% during the last 50 years. Bill Gates and other U.S. investors buy $1 billion stake in Egyptian construction and fertilizer firm OCI NV, according to Forbes in January 2013. UAE. To maintain its position as a major global producer of hydrocarbon feedstock, the UAE's investment in petrochemicals will reach nearly $12 billion by 2015. Dubai's Electricity and Water Authority, DEWA, announced that the emirate is working on the Sheikh Mohammed bin Rashid Al Maktoum solar park project, which will generate 1,000 megawatts of electricity by 2030. The once overheated Dubai property market is heading for a period of realistic growth. The CIA places the United Arab Emirates third at $49,700 US. The UAE's oil export earnings could swell to an all-time high this year, as crude prices are projected to rise again.
If you look at the construction point of view, I think we are looking at somewhere around $220 billion US. But if we will look at the overall GCC countries, this might rise to, as figures are showing us, needed construction until 2025 for the 6 countries would be around $2.4 trillion US.
Iran, first in fruit production in the MENA region. $155 billion in export revenue from oil in 2012. Iraq, $37 billion spending on infrastructure. 9,350 megawatts in renewable energy. $6 billion spending on construction in 2012. Yemen, 44.7% of total area is agricultural land. Qatar, $105,000 GDP per capita, the highest in the world. Oman, Ophiolite, more than 3 times the length of Cyprus. Bahrain, $21 billion from exports. Kuwait, $130 billion spending in 5 years on economic development. Sudan, 43% of the land is used for agriculture. Lebanon, $20 billion to spend on infrastructure. Syria, $40 billion to spend on infrastructure.